What's up guys, Rico here. Welcome back to the Bean Brothers. Sorry guys for my voice. I have pollen allergy. If you know what that is, it is really annoying. I hate pollen. But anyway, today we're going to talk about a swing trade strategy that actually works, especially when you have a smaller account, somewhere between $1,000 to $5,000. Because let's just face it, not everybody has $25,000 to $50,000 laying around somewhere just ready to be invested in the stock market. No, most people usually have, or at least start somewhere around $1,000 to $5,000, which makes totally sense, and there is nothing wrong with that. But one of the bigger issues is it's hard usually for people to be able to scale their money up to be able to get to those big numbers like $25,000. Because one of the struggles is some people think, okay, I can just put it in one stock, and then you gotta wait like a few years before you actually get to that amount of money. But if you're trying to figure out how you can be able to scale this one up slowly as you go using a swing trade strategy that can help you to be able to build this one up in maybe a few months or up to a year, but at least be able to have a consistent strategy or a consistent amount of money that you can be able to get off of a swing strategy and scale up your capital to as big as possible, or even up again to $25,000 or more. But there are some things that you need to know, especially when it comes to a swing strategy like this one. What I'm about to show you is not the only way, but it is a way to do it, especially when you're starting out. It's very basic, and one of the important things is it eliminates as much risk as possible, too much risk as possible. And second, you don't have to buy what everybody else is buying. Just because Melinda over here is buying GameStop and Bill over there is loading up on AMC, that doesn't mean you, Mr. Gates, has to buy into any of them. Nuh-uh. You have to literally rely on yourself, because if you don't do that, you're most likely gonna be left holding the bag, and most of the time they're empty. So before we move on guys, please don't forget to smash that like button, subscribe, and turn on notification bells so you get videos just like this one every single time we post them. So well guys, let's get into it. All right, so I got a chart in here pulled up here, and there are only two things that you're going to need with this strategy. It's very, very simple. You need to be able to identify your support level and your resistance level. Support level is pretty much the level at which the stock can fall. Let's say the stock is falling or is going down, and get to a certain point where it has to kind of rubber band or bounce back and reverse course and start going up. And a resistance level is a level at which where the stock, let's say it's going up or it's trending up, to where it will be able to push back and start going back down, or at least trending back down again. But it's kind of like a level where the stock resists. It's not able to cross that level. That's what we call a resistance level. So you might think, oh, how can I be able to do that? So I want to use what's been happening lately. We know that the stock market, especially some of these, I pick near, or especially some of these sectors, they've been really struggling for quite a while. So you can tell that it's been really going down. It sold off a lot actually, and as it's selling down, you can see it's pretty much going really fast. It's like falling crazy. But then it got to a certain level, which is this level right here, somewhere around, according to this, $34.83, and then it started to rubber band. So because it stopped right here and started to rubber band, we identified this one as somewhere it found support. But we needed to confirm. So now that it found support, now we have to wait to see, since it's rubber band, it's going back up, we need to see where it's going to push back, where the resistance is going to be. And then we seem like somewhere right here, we try to cross this line right here multiple times, but we weren't able, and then we ended up going back down. But as we went back down, guess where we reached? We went all the way back to our same level. So since we already knew that a rubber band from this level, you can go ahead And pretty much, let's say this wasn't here, so that way it doesn't look like it was there. You already know, okay, identify this level. What I'm going to do is, I'm gonna do this. Bam. So now you know this is the level that it came back to. That's your support. Now you have a bounce back at this level before it goes back up. So now you have a confirmation that this is a strong support because you have 2 point of data that's actually showing where the support is. So now, how do I know? Because this up here is pretty much jumbled up all over the places. Where exactly am I supposed to trace my line here? All right. All I got to do is you go back, you go back, you go back, boom, right here. This used to be a whole time high. When NIO was trending up, as you can see here, it got to this level, it sold off before it picked back up, but then it kind of resisted before it went up to reach another all-time high. So this one right here, since it used to be at a all-time high, it is most likely going to be a support if the stock is pulling back, or a resistance if the stock falls below it, which is why you can see it played at a support level right here, and then when it was falling, NIO tried to catch itself somewhere right here, but it didn't hold as long, and we ended up breaking through. Now we are forming a new trend compared to the old trend that we used to have. So now that we broke into a new trend, we actually identify the real support. We know where the support is, we know where the resistance is. So that's why I got my line drawn all the way there. So now all we have to do is, okay, the support is at $34.83. And then the resistance, if I put my cursor right there on the red line, any way I could do it, it says $43.97. So now, if you buy right here, so let's say, like I said, you have a smaller amount. In this case, let's say you have somewhere around $3,000 to $4,000 that you have to trade, and then you buy about 100 shares of NIO, which is going to cost you exactly $3,483. Now, if you were to ride this one up all the way to pretty much $44, that's $1,000, or somewhere that's literally 900 and some change. So pretty much close to $1,000. And that happened in how many days? So let's say if you buy at the bottom here, it'd be 1, 2, 3 days later. So you know you have a gap between the supports and the resistance that's literally worth $1,000 that you can try and play within to be able to swing trade and make some money. So now that, let's say we have this confirmation right here, you buy somewhere down here. You don't necessarily have to buy exactly where the line is. It doesn't always happen all the time, but as long as you buy as close as possible to the bottom, that's what really matters. Of course, you don't want to buy somewhere up here close to the top. No, you don't want to buy in the center. It might be okay, but not really. You're going to try to be a little below the center of this space that we have here, so you can be able to ride it all the way back up. So let's say if you buy somewhere down here, even if you buy somewhere around 35, and you can see you ride it all the way, even though it didn't go in this case all the way up to $44, but you already know that this is the new trend. This is where we are. As long as we have not broken this trend, this is what NIO is going to be doing. And guess what? What always happens in the stock market is a trend always tend to repeat itself. I've seen it way too many times, and most people that have been in the market and been trading, they know this trend always repeat themselves. As long as the trend has not been broken into a new trend, you're always going to be able to see it. All you gotta do is, when you identify these things, you already know what you're supposed to be doing to pretty much swing trade this one. You have to have patience. It's very important. When you swing trading, it's gotta be patient. So if you buy somewhere down here, you know, okay, I can ride it up. You don't have to sell at the top, but you can sell somewhere right here. Even if you didn't know, but it got to this point, and then the next day it drops, but you're still above where you used to be. So if you buy somewhere around like this is 35, and then you ride it all the way, let's say up to like 41, see, $3,500 all the way to $4,100, that's $600 right there. And it only took like 1, 2, 3, almost 4 days again. And all you gotta do is, well, you gotta wait, because you don't want to buy at this level. You want to buy below at least the middle between 34 and 44. So you wait. Again, you can wait. You can wait as much as you want to buy at the bottom, but just like I say, close to the bottom is good enough. Because then if you bought it right here, guess what? You can ride it all the way up. That's another like $700 to $800 right there. And we're back again into the same thing. So you can see how this trend has been repeating itself. So right now we're pretty much kind of like somewhere a little bit below the middle. Like if I were to purchase, I'll probably just wait a little bit more, see where it's going. As long as it's not trying to break this trend and it goes down a little bit more, yeah, sure, I'll do it. And if you repeat this many times, well, your $3,000 or your $4,000 that you had, you know, a month, 2 months later, it could easily turn into a $6,000 to $7,000 as you go. I can actually show you something else. Like I said, it's a very simple and basic one. It's something else on SPCE. This is Virgin Galactic. Try not to buy a penny stock. This is very important. Try not to buy penny stocks. I wouldn't recommend to buy a penny stock because they are very risky and they're very unpredictable, because the company is already in trouble. Penny stock is anything that's below $5. So anyway, as you can see, Virgin Galactic, it sold off, sold off, sold off. And in this case, you can see, let's say you identify this one to be the bottom. Now, you know where the resistance is, you know where the support is, and then you know you get a confirmation right here. And then this is kind of the middle line. You buy here. As you go up, you know already when you're making money, you can be able to sell it. So if you have $2,000, which right now, Virgin Galactic is at exactly $20. So 100 shares is about $2,000. If you can ride it between, you know, it was between 27 and 30, that's a $300. But then as you can see, sometimes they can break a trend like this one. It was in this trend, but then when you wait for it to come back, you realize that it actually broke the trend. It broke the trend, and then he went even lower. So when he goes lower, you wait to find what would be the next support level. Now you identify this is the next support level. Again, if this is support level, where would the resistance be? Or you gotta wait, just wait to see where it's going to resist and push back. And then when it comes back, it's going to confirm the support level. Now you know where the support level is. And then you know where's the resistance for this new trend, where it is. And you can do that back and forth. So I know you're probably going to ask me, so how do you know that the trend? What if I buy somewhere right here and then the trend get broken up and now I'm left holding the bags? Okay, I get it. That's why you don't buy when the stock is going down. What you do is, let's say for example, when you get right here, exactly right there, you need to wait for the next candle to see where it's going to open. If that candle opens above the line of the support and closes above, then you know that you're going back. It just rubber bands. But if you look at this level, it closed right here, but the next candle that opened, it didn't really open above. It literally opened at the line, closed at the line, and then the next one closed below. Now you know the trend has been broken up, and now it started going back down. So that's pretty much it for this strategy. Like I said, it's very basic. It's not the strategy, or it's not the only strategy, but it is a way to do it. It's very basic. It's not professional. There are so many ways you can do this, and there are even much better and much riskier ways you can actually try to do this. But this is pretty basic. This is something you only have to identify two things: support and resistance. So guys, if you would like to trade into the stock market using Webull, please use the link in the description below. Sign up with it, deposit at least $100. You and I will get 4 free stocks up to like $3,700. Or if you like to invest using M1 Finance, use the link in the description below and deposit at least $100, and we're both gonna get $30, just like that. So guys, thank you for watching this video. As for me, as always, I will see you in my next video. Bye bye.